So the fourth bucket that we have, if you are a salaried physician, is a bucket that I call a corporate fixed bucket. As we've already established by now, the biggest expense you're going to have in your lifetime is tax. Right, so we must do everything in our power to essentially minimize this tax as much as possible, legally, ethically, using strategies that are available to us as Canadians to, reduce our taxes in retirement and then ultimately on our death as well, right? So one of the options we can do that is obviously using a TFSA account. Like I mentioned earlier, save money inside the TFSA, invest money inside the TFSA, grow money inside the TFSA, withdraw money out of the TFSA, all of it is tax-free, right? But the problem now is that the TFSA is limited to $6,500 per year, right? So now what do we do? Well, what we're going to do now is essentially be able to use a corporate fixed bucket, which essentially what it is the biggest loophole that exists in Canada is that you can take taxable money and put it through an insurance wrapper and convert it into tax-free money on the other side, which is absolutely amazing, because now what that means is that we can actually take taxable money out of your MPC, Medical Professional Corporation, funnel that money inside an insurance policy, which can invest the money tax-free, grow the money tax-free, and then on the other side, when you're retired, you're going to receive that money tax-free as income, which is absolutely crazy because there's no other thing that allows Canadians to do that except the TFSA account, which is obviously now limited. But through this, now we can start saving $50,000 a year, $100,000 a year, $200,000 a year, and really get to the bottom of it. So I think this is an absolute must for Canadian physicians if you want to build yourself a tax efficient retirement plan. Because now, same thing, right? Imagine now that you're retired, you have your CPP that you're going to receive, you have your old age security that you're going to receive, you're going to have your pension amount from your PPP that you're going to receive. So all of that altogether might be, let's say, maybe $150,000, $200,000 a year, right? Guaranteed, almost like pension styles. And then you add the corporate fixed bucket on top. Now all of that cash, so let's say if you're saving about $100,000 a year and you're somewhere in your 40s, you're probably going to receive maybe $150,000 to $200,000 of tax-free income on top of the CPP benefit, old age security benefit, and the pension benefit. So now you're looking at an income of about $400,000, $450,000, extremely tax efficient while you're working right now, then while you're retired, and then eventually when you die as well. Because the insurance wrapper, this corporate fixed bucket, because it's based on some sort of an insurance policy, at the end of it, when you die, there is a tax-free death benefit as well. So not only will you receive probably upwards of $150,000 to $200,000 of tax-free income for at least 15, 20 years of your retired life or your financially independent life, after that, whenever you die, whenever you pass away, your kids will also receive upwards of $2-3 million of tax-free money as well. So it's an absolute no-brainer for internationally trained physicians to have, this corporate fixed bucket as well.